Alright, we're gonna start recording here. The screen. I'm gonna open the screen up here on Discord. Alright. I'm just gonna wait until about probably like 2 more minutes. I'll edit and cut this. It's a little bit closer to like 1 o'clock and we'll get this going. Alright. Give it a few more minutes and we'll get this going.
Yo,
Yo, what's good?
what's good, bro? You alive, bro?
Yes, sir. I'm gonna record this
Happy
and put
New,
it on YouTube as well, just so y'all know.
uh, Happy New Year, bro.
Happy New Year, Merry Christmas, Hanukkah, everything y'all celebrate. Happy everything. How's your New Year's?
Working.
Oh damn.
Yeah, ain't too bad though. For working. Just trying to get some more money this year, man. How
Yeah,
about you? Everything was good?
everything was good. Took well rested time away from the charts. It needed. I think I needed it. All right, let's get this going. Did you trade at all?
No.
No. Yeah, I didn't need that. I try to stay away from the charts as much as possible. I was like, I need this time, but
Yeah, and to be honest, if it's like the week of big holidays, I don't mind taking off because I don't expect everybody to be back.
That's exactly what as I started getting into the trading career, because at my first year I was like, I'm trading every single day that I can. And then I was like, well, I'm treating this like a few years. Started going, I started going through it a few years, and I'm like, yo, I'm treating this like a job, but even worse. And then I was like, you know what, I need to take some time off and you know trade as much as I can correctly, but you got to take some time off the charts. You need to. It's like taking a regular
Yeah,
vacation. You got to take a vacation. Re-
yeah.
Use the benefits of what you did for the year. All right, let's get into the outlook of what I think is gonna happen in 2025. Let's start there. Um, Usually, the first term of presidencies usually is good. If you go back to the first terms of Biden, of Obama, of Trump, you see there's always been a spike up on their terms, and usually the first terms are good. You see that 2016, 2020, despite um, COVID, it ran up. And you see that there's always been a decent year. No, not decent year, excuse me, decent quarter. So I'm expecting the same thing here, but nothing too crazy. I do believe we're going into a longer bull run with about a 5%, 5 to 8% pullback every time we gain up. I think by the end of the year, from where we're at now, SPY is gonna be up about wrong one. Where's the measure? 12%. So up around here, 660, 670. I believe SPY is gonna be up here by end of the year. Now this could look like this. We come down and retest that 610, 600 level. We have that little mini correction to come back down to this level here, and then we hit at the end of the year with the standard rally and all that. Don't mind this straight shot up, but up into that 660, 670 to end the year up at this level up here. I don't think we hit 700 this year. I think we get to 660, 670. That's just basically going off of the usual 12% of what 12 to 14%, but averages out to about 12% that SPY makes a year. So that's what I have going on SPY. I have that outlook, I should say. We hit that 660, 670, and I'm not as I'm bullish, but I'm not as bullish, I should say. Just because this first week coming up, I do think we will see some of a downside, and it's not to predict that we're not strong. I just think people are weighted for the end of the year to then close their positions that they made in 2024, and they usually do that within the first week and a half to 2 weeks of the new year, so they could roll over their gains for their taxes for the following year, so they could push their taxes for the year. So I think within this week and next week we'll start seeing some people sell, but it shouldn't be a panic because as you see here in SPY, how many weeks was this? It was 1, 2, 3, 4, 5, 6, 7, 8, 9. Once you start seeing something like that, 5 or more weeks of just straight green, in a very tight consolidation pullback, and then another what 1, 2, 3, 4, 5 weeks again. That's institutional buying. Those are all the hedge funds, the mutual funds. They're all getting back into this position here. Super backed with money right there. And then you know, if they were backed by money here, then everybody got on the train late. If they waited for that 600 break and stuff like that, but that's this right here is the reason why I'm super bullish, but cautious still after the profit taking. So I'm just gonna wait until some people profit take and stuff like that, which is usually around the end of, where's my calendar? So give it about, honestly, next week. I would say you should start seeing things come back to normal and get back into the bull run, in my opinion. Let's go over long-term stocks, what we're looking at long-term, and then we'll go over kind of like not a watch list, but we'll create the levels on SPY and QQQ. So to start off, I have 3 groups. 3 groups that I have here for long term. So basically with these 3 groups for long term, what I'm looking for is, I can't change it. I'm not going to change it. They're going to be in my portfolio for a year. There's going to be ones that I call YOLO, which are kind of speculative. Ones that I believe they're going to do really good, and those are the large caps, and then I have some small and mid caps in there as well, which are like younger stocks or cheaper stocks in a sense. So we'll start off with let's start off with the big guys. Let's start off, typing on the chat. AVGO. Now, with AVGO, let me remove these drawings. We have seen a sharp incline. Completely a trend market. That's 1, 2, 3. 3 legs right there. So, this for me long term, I'm looking to get in a little bit down here, closer to this 200. I would ideally love that 200 down here for a long-term position. So we'll mark it here, right there. So currently what I'm going to do is I'm going to set my buys to buy shares of AVGO at 200. The reason I like AVGO, let me see if I could, actually, I'll bring it up on FinViz. I think I could pull it up on FinViz for you guys. Probably see it better. You can see that down here?
Yeah.
Okay, perfect. So basically with FinViz, they recently got the 1 trillion evaluation. So this market cap is up to the 1 trillion that they have. I do like that their focus is app specific to AI workload as of now. And their forecast about 30% of growth, and the return on equity is about 52% around there, which is amazing. So that's that 30% growth right there, and their sales is quarter to quarter, they're looking at basically 52%. That is huge for me, especially with what they have going on with basically everything around AI. I do believe that we are going to be moving into kind of like the internet road, like when internet first came out, just like when um yeah, like basically when the first when like I want to say like 1998, 1999 is when the internet kind of like took off. It's like in like 2000 with Y2K and all that. That's when the internet really took off, and certain stocks are the ones that took off because they created that roadmap or roadway, kind of what you say. And I believe that we're entering to now the AI roadmap, and everything is going to be focused on AI slash crypto in order to push that. So a lot of these stocks that we're looking at is going to be kind of geared specific towards around that. I just believe with this presidency and what we have going on in our future, and I believe AI try to focus some stuff into AI, and AVGO is one of those stocks that has that. And of course, as you saw, it has great um, forecasted returns, and the growth is really good so far, especially with that 1 trillion evaluation. But yeah, so I'm looking for a buy at this 200. It would be very nice if we get it. We're about $32 away, but if we get strong and we're back up to this 245 area, I'll most likely buy some up here as well. So I'll mark it kind of that level there. If we get back up above here, I'll have to enter at a position up here. But my buys would be down here at this 200. Another stock that I have for long term is this GEV. And with GEV, as you see, we like we said earlier, it is fairly young, but they're a spin-off to GE, like GE Energy. Um, they have these small nuclear power reactors. So that goes in play with the energy that they're going to be using for AI infrastructure. So again, it's around AI. Um, it's a little bit expensive. I know it's around the 350-ish. But what called my attention, it being kind of new, and it is a spin-off of GE, but you see these weeks right here. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks straight of solid green candles. Like, that right there was just basically telling me that big money's behind this. And it's consolidating right now. And it's a beautiful move. I don't think this would come down here to this 200 level to retest. Ideally, that's what I would love. But I'm looking at 300 potentially, or something a little bit closer. You see this consolidation here. So I would love it at this 315, 300 level. But even a break and hold of this 360, I would jump in. So those are the levels right there for this long term. And again, if you look at that's their daily, but it's consolidating right here and breaking out, which is beautiful. If you look at it, their sales growing, like it's growing, and big money's behind it. Especially when you see like I said, all those weeks stack up. That's beautiful. That means, especially like weeks. We're looking at weeks. That means how much money did mutual funds and what am I trying to say? Big money. Yeah, I'm just gonna say big money. Big money's behind it. And as you see, they're always early to stuff. They never wait for the end of the year. They have to gear up money before the end of the year, because every year they start off at zero, so they gear up their last quarters and they jump in. We're always going to follow that big money, and you just see we're in this little channel here. That's the same channel that we have here on FinViz. So anything down here at this 300, 310, buy for long term, and a break and hold that 360, we're buying for long term. But this right here is what I love. Institutional buying right there. Now, this one, I'm pretty sure everybody knows what DoorDash is, or who they are. Not who. But basically, the reason I like DoorDash is exactly the exact same thing. We have a 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks straight at the end of the year where they basically just ramped up and put big money into this, and it's starting to curl back up to these levels here at this 255 where they had the all-time high. And when this occurred down here, their earnings, if we go to Dash, I don't think I could pull up actually I could pull it up through here. Their earnings here, if you look at it, they were basically losing money, and they're gaining money now, and they're sitting on cash, and they're almost back at this 255 level, the all-time high, 255, 260, and they're gaining cash now. So here they didn't have cash reserves. Here they have cash reserves, and they're under this 255. So, and with that institutional buying down here, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks straight, I'm all for it. I think that DoorDash is going to be going ballistic. Especially, again, they have about 2/3 of the restaurant market delivery. They have bigger chains, not the mom and pop shops. I believe Uber has more of the mom and pop shops compared to DoorDash. But DoorDash holds about 2/3 of the restaurant market in the United States. So I'm officially behind DoorDash for long term. I don't think we should wait for this 255, 260 to break. In my opinion, even any slight of a pullback here, I would grab some and start building a position before it reaches these all-time highs and probably even breaks out. But for entries, you could honestly look at, like I said, any little pullback into this 160 or a break above this 182.5. Let me bring down to the 160. If I could bring this down to 160. Around there. Anything here, this 163, 164 to 160, pull back down here, start to build your position long term. Right here. Build your position long term, break and hold, build your position long term here. Anything down here, you would definitely buy more. But this is what I see for sure. I see this to come down here, maybe even touch this and go back up. If we break below this 160, we'll test this 145 area, and you could buy some down here. But I believe DoorDash is one of those that's just going to go ballistic this year, because again, they didn't really have good earnings down here, and they were at 255, and now they're starting to have good earnings and a good hold of the market. And with DoorDash, with what they use, they're using AI technology. Again, with the AI infrastructure and everything that's going on, this should boom. So that's what I'm looking at for here for long term. 160, 163 ish, 164 you could call it. You could even get in at 165 or a break and hold above that 182.5. And again, we're below that 255. You understand, like that level here, and they had bad earnings and they were losing money, and now they're gaining money and they're below this all-time high. Yeah, it's a really, really good one. Next one, you guys probably know it. We've traded it a few times last year. SE. We'll go same thing. SE. So in 2022, there was a correction of this stock. As you see, it started to come down. I like where it's at right now. It's very tight in price action, as you see it. So it's kind of wonky, and it's very tight in price action now. You see, it's starting to build that step and start to keep going. Again, I think the big money's behind this as well. If you start looking at it here, it's a lot tighter in price action. Like I said, if you look at the 4 hour, it's a lot tighter. It's not as erratic as it was back in 2022. Oh, I'm in the 4 hour. It'll take me forever. In 2022 was a little erratic from up here. Kind of just fell down. Filled gaps where it needed to. It's starting to build its base, and I do see this curling back up, just like DoorDash, all the way back up here to this 380 level. Call it even 400. It's at a very, very good place right now. They're at 106. My level to get in, honestly, would be, I want to see if we get back down to this 100, 102 to 100. Oh, wrong mark. I want to see if we can get down to this 102 again, down to this 100. I'd love for it to come back down here, but a break and hold above this 110, I will be taking a position. I will definitely be taking a position. I really like that level, that 100, 102, previous resistance turn support. And this right here would be breaking out of all of this noise that we have down here. And we're going back into this next consolidation area from 110 to 120. And then it's just, we're in this next zone. So I'm fine being in this next zone, getting it early with a break and hold, and waiting for that thing to just rock out. Because once it does that and it breaks 120, next level is 140. And therefore, you're like, we just keep going. And they've had good earnings since their debacle. They're kind of like beat down, or I call it, honestly, the correction. And just because I love my ETFs, here's the ETF that I'm personally getting into, and it's the Bitcoin ETF. So there's a different amount of stocks, or sorry, cryptos in the Bitcoin BTF. If you don't own individual coins and you just want to join the ETF, this is a great alternative. Or if you want to do both, do both. I personally do both. It's just what I like to do. I like to invest directly into certain stocks, certain cryptos, and then get into a ETF where they has everything, because I can't capture everything in the market. So positions here for IBIT would be a pullback, any type of pullback into this 50 to 40. I would buy some here, or a break and hold above this 58. And anything from, like I said, 50 to 40. I know that's a big zone here, but that's where I'm at with the IBIT. It tends to move a little bit quicker. As you see, the volume starting to kick up as soon as it started to break out with elections. That's that election pump right there. And it held 50. Let's see if it actually does hold it. It's very, very tight consolidation here, something that you like to see on another bull run on the weekly chart. So that's what I have for large caps. Let's go over the small and mid caps. I start off with Astera Labs. I really don't do big pharma stuff like that. This is probably the only one you're gonna see. But again, back with the pump 1, 2, 3, 4, 5, 6, 7, 8, 9. Like that's institutional money right there. That the money's behind it. So what does A Lab do? Astera Labs. They are they have specific core switches for businesses that are geared for workload in a cloud environment and AI. And they sell their own technology and subscription based stuff as well. But as you see, their sales are starting to gear up. They're projected to have good numbers, and again, this I'm more behind this because of the AI. But yeah, that's basically why it's there. Big money's behind it. Look at it right there. You basically see it right here. Now entry zones here. I'm looking for a pullback to this 120. I don't think we'll get there. Ideally, I'd love this. I would love for this to come back down here and fill this gap, and we could enter here. But I think we're not gonna see that 120. But again, that's where I'm gonna have my buy point at the low, that 120, and a break and hold above this 148. Oh, I did the text. Give me a second. Oh, 147.5. Let's call it 147.5 instead. So a break and hold above here or a bounce down here. I would love for it to get down here to this 120. It would bring my my position a lot better, in my opinion. But that's what I have for these smaller caps. Again, these smaller caps and mid caps that I'm going to show you, they're a little bit younger. As you saw, they're a young company. They opened up in, well, the IPO opened up in March. And as you see, big money has just been behind it since it's been down here since September. Kind of where it goes to line where they tried to institution money, mutual funds and all that. They try to unload their money before the end of the year, make a nice run, take profit beginning of January, and basically once January hits, they show that hey, we're already in profit. Now these are the same ones that gave us profit. Let's keep running. Let's find a new number for this to keep running. That's kind of like what they do, in a sense. But big money's behind this, as you could clearly see it. It's beautiful, and they're fairly new. Nobody really talks about them. Again, the AI run. I mean, I could show you. VF. This is the internet kind of a bubble run back in the day. I gotta scroll down. Memory lane right here. Here we go. Right here. This is the internet run, in a sense. 1996, 1997, 98, all the way to 2000. That's the run right there. Internet was kind of a new thing, blah blah blah. 97 hit, institution money started getting into it, and then boom, that 98 hit. Internet was a big thing. Internet rode, fiber optic cables and all that to build the internet road, and this thing shot up from 20 to 21 all the way up to almost $1,000 a share by the year 2000. So that's kind of like what I see going. That's going to happen with AI, things around AI and infrastructure. Next thing that I have here for the small caps, mid caps, is SoFi. Let me refresh this. There we go. So the reason I like SoFi is because you have a lot of fintech, which they use a lot of AI technology with finance that are focused more on millennials and the next generation. I always forget the next generation after millennials, Gen Y, Gen A, whatever it is. But they're very, very focused on that. They're young. I don't think they were ready to be in the 20s and 30s when they first opened, and it showed. As you see here, they tried several times, but they didn't have they didn't have good earnings because they were mostly focused on student loans. But now that they have credit cards, um, they have credit cards, they have other I forgot what else they have, but they have a lot of other things now with the financial section. So credit cards, they have of course the student loans. I think they have checking accounts now as well and savings accounts. They have stuff where you can invest, kind of like Fidelity as well. Um, but they all do stuff around AI where you get approved and you get credit worthiness and all that through their AI system. So they're heavy on AI, which and they're so young, and with the millennial crowd and the younger crowd, that's how they're gonna look to be getting approved for things. They do loans as well, like personal loans and things like that. So I believe in SoFi. It's a great area to buy it. You could start buying SoFi at 13, even at the 15 mark, a break and hold above 15. If you want to wait a little longer and break and hold above 17.5, you can do that as well. You could wait for it to get out of the zone, but I'm fine even just buying it exactly where it's at right now because it's so cheap. Um, Only reason is because it's that cheap. It's $15 a share. I'm fine buying it at $15 a share. I'm fine shooting in the dark with that one. Next one, you guys definitely heard of it as well. Affirm Holdings. They're they're fintech as well, but their main focus is more around the buy now pay later, around AI as well. They approve you of credit worthiness with AI, and a lot of the bigger companies are starting to let you buy things with Affirm. So Affirm has their credit card as well, and they let you purchase stuff with their credit card or online with Affirm now. And they'll start boosting up your credit worthiness, so your money, based on how you pay using AI technology, which is very, very cool. It's crazy to think about that. That's how they do it with AI. And again, their focus is with millennials, and their focus is around AI as well. And you have institution money coming in right here as well. A nice tight consolidation popped up. Nice tight consolidation. They're starting to gain momentum. A lot more money behind it. Earnings are looking good. When we were back up here at 178ish, almost 200, they didn't really have that good numbers because they were fairly new. And now with good numbers, they're below 100. So levels here that I'm looking to buy: 60, anything in the 60 range, I'll buy, and a break and hold above 68. I like that right there. This little zone. I don't mind getting into this consolidation and everything here because this is long term. This is completely long term. This 68 here is fairly good for me. I'm fine with this consolidation here. I'm fine if it comes down to 60. Either one. Now we're going to go to Bros. So, with this one, you see this right here is what called my attention. This big green candle here off of earnings. Last time I had a green candle like this, it was when they opened. This is the Dutch Brothers. They're looking to open more stores. But I'm behind this because big money's behind this. So, bros before hoes. You see everybody is moving this from neutral to buy, neutral to buy, neutral to buy, buy. These are all the people looking to buy. 4 reasons to buy. Like there's no tomorrow. Like the money's behind us now. And that's what I'm looking for. I'm looking to be behind the big money with the mutual funds for my long terms. But they're think of it as like coffee shops and other stuff like that. They're looking to open a lot of stores around the nation. But the reason why I like them is because big money's behind them, and they're gonna use a lot of AI in their store as well. Again, theme here is AI. They're gonna be using point of sales that has AI. They're gonna have people be able to pay with Affirm and things like that as well. Going off the point of sale, that's what we're gonna look at now. Toast. Again, big money's behind this. Keep looking at it right there. 1, 2, 3, and just look at that. It's high consolidation. Big money's around this. Again, this IPO opened up around the 70 mark, and they weren't ready. They had bad earnings. Tight consolidation. They started getting their shit together. I wish I got in down here, like everybody wishes, but tight movement here, and big money's behind this now. As you see that tight consolidation, this big movement here, very big earnings, big green candles. That's exactly what we like to see. Wait, did I give you guys levels for bros? No, I didn't give levels for bros. That was my bad. For bros, honestly, I'd love for it to come back down to 50, 51, 50 range. Ideally, anything below here, I'm definitely buying, even if it comes down and fills this gap, or even just a break of this 58, break and hold above that 58 right there. So I'm looking for this to come down anything between 51 to 50, buying, break and hold above this 58. If we get below 49, again, to me it's a no-brainer. I'll buy long term down there, anywhere down here in the 40s, even in the 30s. This is long term, and it's fairly cheap, where you could put some money into this and it'll give you a decent position. Go back to Toast now. Toast Inc. Software infrastructure technology. Everybody's downgrading it. Not everybody, but people are downgrading it to neutral. Outperforming new price target. These people had bullish. They were super bullish in the 40s. But a lot of analysts are behind this, looking for growth on this. The reason why I like this is because we were in DoorDash earlier, and we were talking about how they use their technology to benefit, and they're looking to have more and more stores. So Toast is a point of sale that helps restaurant use DoorDash, Uber Eats, and things like that. It had a tight consolidation here, as you see, super tight consolidation, and it broke out. Usually after a super tight consolidation and a breakout on a weekly, kind of like this, and then you have this type of breakout, tight consolidation here, big numbers, earnings look good, they're starting to get money, that means big money's behind it as well. So big money's behind it, I'm gonna be behind this one as well. And it's kind of like a assist play off of Dash. And we're going to look for Is it AS? Sometimes I can't even read my own handwriting. Yeah, AS. Oh, entry levels on Toast. My bad. My bad. I'm getting excited here. 34 to 30 or 35 to 30, either one, would be a beautiful level to get in, and a break and hold above 40 would be nice. Or honestly, yeah, 40, 40, 40 would be decent. You could wait for that 40 to break and hold. So, 35, you could get in there. If it gets even lower, you could get into 30 or break and hold above that 40. And again, these are long-term positions. Look for this. Look for Q3, Q4. Your positions are around that time. If you're gonna load off any position. AS. AS is new. They opened up in February, but look at that right there. Look at all that money going into this. This is the weekly chart. That is just beautiful. So, a little story behind AS. AS was founded by the founder who formed Lululemons. So him and a few other people who founded other bigger companies in China and things like that founded Amir Sports. And this is literally just based off of Lulu, how Lulu's been performing, how Lulu has performed, how Lulu was run. As you see, like when they started way back in the day, how Lulu was run, Lulu was started. I feel like we are in this little zone here in AS, getting ready to explode. It's the same guy who did Lulu is the same guy who's doing AS. Only difference is AS is actually in China. If I'm correct, I believe their headquarters is in China. Hopefully I didn't click on the chart by accident. Okay, good. See, a lot of people saying buy, hold, buy. A few people think it's going to outperform. Amir Sports say bull case theory. Best new stock to buy. According to hedge funds, we're going based off hedge funds here. But if you look at their numbers, the numbers are looking good. Their numbers are looking really good. Market cap is growing on this as well. And institution money is pushing this up. So for levels for this guy, we're looking for a break and hold above this 30. We'll get a position there. And any pullback into this 25. Right here. Any pullback into this 25 to 20 range. I would get in here. Any pullback in here, I'd love to be in this zone. That's that 25. We could buy some here. Break and hold above 30. We're going with this right here. AS. Same founder of Lululemon. Next one is where I think people are going to be spending their money. Viking Holdings. It's a cruise ship. The way I see it is every bull market has a leisure. And if we really are entering that big bull market where we'll probably have in 20 to 30 years probably two pullbacks of about 8%, 5 to 8%, then I feel like this is a company that is going to benefit from American leisure. 90% of their customers are from North America. and people have to spend their money. So their cruise ships is around the Mediterranean, like islands and stuff like that. It's like Viking tours, some shit like that. But it's just straight up cruise line, and I think this is where they're gonna be spending their money. Um, this kind of tells you the story just off rip of how they're doing. Again, institution money is behind this. Look at these candles. Like even this red candle here, it came down and it pushed back up. That's a bullish candle right there. For levels here, for Viking Cruise, I'm looking for 40. Anything from 41 to 40, I'm buying. My numbers are horrible there. There we go. Anywhere from 41 to 40, I'm buying. Um, Break and hold of this 45, I'm buying as well. It's another big psychological number. I'm fine being at the top here. I just don't want to wait for a break and hold above this, because it could just run. That's where I'm gonna set my buys at this 39. Oh, excuse me, 40 to 41 and 45 is where I'm gonna start placing my buys. And as you see here, it correlates with a nice level. And up here, there's a lot of resistance up here, but I'm fine getting into this a little early because it's long term. Let's go over my YOLO concepts. This is like if it runs, it runs, kind of a sense. Like it looks good, but who knows? Serve. So what they are, think of the last mile delivery. So they have little robotics, so little robots. I don't know if you've kind of seen some commercials of Amazon with a little robot, or I think Walmart, I forgot who it was, some company, doing little robots, and they're doing like a last mile delivery. So this is basically a company that's doing the same thing and would most likely be selling or merging with like a Tesla, a Amazon, a Walmart, companies like that, even a Best Buy, etc. BJ's, Costco. They're looking to merge with somebody like that where they do the last mile delivery. They already have robots out in California, and I think Austin, Texas. I want to say San Francisco has them. I want to say San Diego, maybe Seattle, if I remember correctly. And I want to say Austin, Texas. I want to say Austin, Texas, but I could be wrong. But that's basically what they do. They're just robotics, again, around AI technology. And this is the last mile delivery. So, yeah, that's what I'm looking for. But as you see, it's tight consolidation here, and then it's starting to run up, and you got that weekly 1, 2, 3, 4, 5, 6, 7. 7 times has been green weeks, and this is despite, if you do a comparison, there's a reason why I keep saying these weeks, because if you look at a comparison to SPY weekly, SPY hasn't been doing so hot weekly compared to the 9 here. So that's what, 1, 2, 3, 4, 5, 6, 7. And you see what SPY's below 600 now, and this thing here is just going, which means big money's behind it. How else would a small company like this be pushing up higher? But this is a YOLO concept. So for levels in this, I'm fine buying it exactly where it's at, or you could wait for a little pullback into this 10, 15, any big psychological number. So even that 10, if I could get it right there, the 10, or a break and hold above 20. So any of these 3 levels would be perfectly fine. Again, just like SoFi, where it's so cheap you could pretty much buy it right here and you'll be fine. Again, this is just like a YOLO concept because I think they're gonna get bought out by somebody, or they're probably gonna do a contract, maybe even with like Amazon or something. Next one, I am looking at KT Rocket. I know it looks like it is to the downside, but I think it's done. I'm not gonna lie to you. I think it got beat up enough where, because Rocket Company is kind of what they do is mortgages, and the way that they approve you is through AI. So if around Q2, Q3, Q4, where I think people are gonna start buying a little bit more, Q2, Q3, Q4. Usually Q3, Q4 is where people start buying a little bit more because of they get their taxes back. Sometimes Q2. But Rocket Company is somewhere that they're gonna approve you for X amount using AI technology. So once that starts ramping up, I do see Rocket Company starting to curl up, and I would love to buy it at this low right here. So my buy point for Rocket is anything below 11.5. Let's just put it like that. Anything below 11.5 would be the buy point. And I'll leave that to your, like, everybody's discretion. You could buy here. You could try to wait if it goes a little lower and try to buy some down there. For me, anything below 11.5, I'm fine buying for Rocket. And another stock that I think the selling is done is silver. I think with silver, I think selling is done with silver. They've been getting hit quite frequently. First Majestic Silver has been getting hit, and it's very cheap. Again, it's very, very cheap. This is a yellow potential. I think they have no more downside. I mean, what you're gonna do is go down to $2, $3 for the silver. I don't think so. I think the silver's gonna make a nice little comeback. But this one's just basically just a straight opinion for silver. There's no like big money or anything that I see. I do have some commodities and stuff like that. Has nice dividends. Nothing too crazy. But yeah, I just don't see silver going back down to like $2, $3 worth. So that's basically it. And for silver entry, AG, exactly where it's at. $5, $6 is fine. $4, $4.80, anywhere. They're about $5 a share. Can't really go wrong with that. So that's what I have for the small caps, the YOLOs. But yeah, that's what I have right there. But the reason why, let's go back to SPY now and tell you why I'm a little cautious until the 17th, basically until next week Friday. There's about, from the money market funds, after doing a bit more research and stuff like that, there's honestly about 6.345 trillion money sitting in money market funds to begin the year, where they're not going to pull a position until basically after their clients, or after they sell positions for their clients, and then they'll either push a stock down to load up their position or push a stock because they think the prices are just gonna go even more crazy because they're so behind it. So imagine being flooded in the market with 6.4 trillion dollars. So it's gonna move it somewhere. So I'm basically waiting to see what big money's doing for my long-term positions. Um, a sleeper that I kind of have that I don't that I need to do more research on would be more cannabis stocks. I feel like with Trump in office, it could be like a sleeper in a sense, kind of like something that people aren't really paying too much attention to. But I think AI, infrastructure, fintech, crypto, semiconductors, that's the way to go. Um, that's why I went back to the AI ETFs. So these are the AI ETFs. So you have, as you see, Future AI and Tech, ARTY. Those are the ones that I sent last year. BAI is from BlackRock ETFs. This is again AI and Tech. And IETC. Again, tech independence focused. Their focus is U.S. technology, all around AI as well, with infrastructure into it. The infrastructure of AI, so it goes back to goes back to fuck. What stock was that? That did the specific workload. ALAB goes back to like ALAB, where they have switches and core switches and stuff like that. That's kind of like the infrastructure. Cybersecurity is going to be huge as well, along with AI. AI gets more aggressive. Cybersecurity is going to get more aggressive. Technology gets more aggressive. Infrastructure for all that, and then that's the reason why we wanted to play that GEV, the spinoff, because they're going to be using more energy for stuff, and GEV is the energy spinoff that plays into the AI power grid. So I'm very, very behind AI. I want to catch that internet bubble, basically. Internet roadmap, highway, whatever you want to call it. I want to catch the AI one because even with crypto, you're gonna need AI in order to do any pay any function with blockchains and everything. And AI needs to be integrated with the other companies. So that's where Toast comes into play, and DoorDash, because if you're gonna buy something, there needs to have AI capabilities. Um, I'm just better like I'm behind AI and security for it. So that's what I have for long term for the year. Do you guys have any questions on anything? I know that was a lot. Do you guys have any questions on any of that? You could type it, you could talk, whichever one you want. What's take profit? Honestly, this is a year. So take profit honestly would be your discretion. But what I normally do is if this like ran up a crazy amount, I'm not taking profit until the first 2 weeks of January, just like the mutual funds. But at that, I'll probably just keep it and let it ride. You know what I mean? Like if it's doing that good already, I'll ride it to the end of the term or just keep it and go to a bank and get a loan instead and use my portfolio as collateral. So like I'll show them my portfolio, let's say like for example, 10K. I have good credit and I go to the bank and I say, "Hey, I want a loan for 10K. But I want to use something for collateral. Like I have the 10K here, but I'd rather you give me a loan." And they'll be like, "Okay." And you use that 10K for something else and you pay for it with your stocks. Because at the end of the day, they're going to look at it and say, well, technically you have the 10K and push comes to shove, you can pay for it. You can pay for the whole thing. But again, take profit. It'd be your discretion. When it comes to long term, I tend to not look to sell until at least 3 to 5 years, sometimes even longer, depending on how good or how bad it is. If it's doing bad, I'm getting out at the end of the year, and I'll reevaluate. I'll just be like, that's not going in my portfolio. It's kind of like a no no parlay. Like I'll put people on my no parlay list, and I'll be like, yeah, I'm not touching you again. But yeah, that's what we got going on. Now let's see what Spy has been doing. It's gonna be very, very quick. I know we've been on for an hour. But as you see, I'm not bullish on Spy until we break above 600. And then we have that 610. And we'll create those new highs once we get above that 610. Anything below 580 will finish filling this daily gap up into this 577, 575 range, where we could definitely jump into some calls. And let me go to the 4 hours so you can see a little more. So like I said, this 77, 75 range, because it'll bring it most likely to that psychological level, which is down here as you see it. If we get down here, I will 100% jump into some calls and close my eyes. But again, I am not bullish until we break and hold above 600 and form very nicely here, and then the next target would be that 610. And a break and hold above 610, off we go. But again, I don't see us moving that much in the first term. Even though usually the first term we do good, I do see us coming down a little bit the first few weeks of January, and then we shoot back up and kind of form new highs and everything for the rest of the year. I think we're gonna get another Santa rally, and I think the summer, June, July, August are gonna be really, really good in the stock market. But that's what we got going on. Be on the lookout for the watch list tomorrow. I'll send out the earnings report later today and the news that will be coming out this week. But yeah, it's gonna be a good year. Let's load up. I'm thinking of doing a challenge. Oh, QQQ. Yeah, my bad. I'm thinking of doing a challenge this year. I don't know when. I'm still thinking about it. Kind of a $1,000 challenge where I'll trade with a $1,000 account and look to build it to 5, and then look to build the 5 to 10, and etc. The end goal of that account would be 2.5. Not 2,500. It'll be 25,000. That'd be the end goal of that account. But I'm looking to see when to do it. I gotta figure it out. QQQ levels, same thing. I'm not bullish on this until we break and hold officially that 540. Yeah, we get above that 530 range. I'll give you better levels, for sure, better levels in the morning. I'm going to chart up a little bit more since I've been away from the charts, and it's going to take me more than an hour just to kind of like look around past weeks, and kind of forecast, kind of look around the market. That's why I don't want to do it right now, but I'll send that out. I'll send out the watch list like I always do. And I'll catch you guys on live tomorrow. But right now I'm looking at anything in this 505, 500 range. I'll look to buy for sure. Even down here at the 495, you can get some long leaps at this range here. Again, this 530 for me, it needs to break and hold above that for me to start thinking bullish. But I do see us coming up a little bit more and kind of staggering for the few weeks, maybe even consolidating for a few weeks until people get ready, because you have the inauguration right after the 17th. People just sold. or are selling. And then the first term hits. And then once that first term starts getting rolling, that's when we start seeing usually the good profit and the good bull run start running. But yeah, again that 530, and then eventually we have to break that 540 to finally be super bullish. But I do see us kind of getting up to this 525, 530, rejecting, coming back down to this range right now where we're at, and then shooting back up. I don't see us breaking below 500, but that's just me. But that's what I got going on. I'm gonna catch you guys tomorrow live, and I hope you guys had a great time off. And let's get it. I'll catch you guys tomorrow. If you guys have any questions, just put it on the Discord, and we'll go from there.